Hey, welcome to this video on fundamental analysis. Are you interested in investing in the stock market but don't know where to start? Or maybe you're a seasoned investor looking for a new approach to pick stocks. Either way, this video is for you. Today, we'll be covering what fundamental analysis is, why it's important, and how to get started. So let's dive in. Section 1. What is fundamental analysis? Fundamental analysis is the process of evaluating a company's financial and economic fundamentals to determine its intrinsic value. This involves looking at factors such as revenue, earnings, assets, liabilities, and cash flow. By doing this, investors can determine if a company is undervalued or overvalued relative to its market price. Section 2. Why is fundamental analysis important? Fundamental analysis is important because it helps investors make informed decisions about which stocks to buy and which to avoid. By evaluating a company's financial health, investors can gain a better understanding of its growth potential, risks, and overall profitability. This information can then be used to identify undervalued stocks that have the potential to generate high returns in the future. Section 3. How to get started with fundamental analysis. Getting started with fundamental analysis is easier than you might think. There are many tools and resources available online that can help you evaluate a company's financial health. Some popular resources include financial news websites, company financial reports, and analyst reports. Additionally, there are many books and courses available that can teach you the basics of fundamental analysis. So there you have it, a quick overview of fundamental analysis. By evaluating a company's financial health, investors can gain a better understanding of its growth potential, risks, and overall profitability. This information can then be used to identify undervalued stocks that have the potential to generate high returns in the future. So if you're interested in investing in the stock market, consider using fundamental analysis as a tool to help guide your investment decisions. Hey, welcome to this part of the video, where we'll be doing a fun and interesting fundamental analysis on XYZ stock. We'll be exploring the different factors that can influence a company's financial health and using them to determine if XYZ stock is worth investing in. So let's get started. Section 1. Revenue. One of the key factors in fundamental analysis is a company's revenue. In 2021, XYZ's revenue was $274.5 billion. This represents a 36% increase from the previous year, which is a positive sign for XYZ stock. Section 2. Earnings per share, EPS. Another important factor in fundamental analysis is a company's earnings per share, EPS. XYZ's EPS in 2021 was $5. This is an increase from the previous year and indicates that the company is generating a profit. Section 3. Assets and liabilities. A company's assets and liabilities are also important factors to consider in fundamental analysis. XYZ's total assets in 2021 were $335 billion, while their total liabilities were $110 billion. This gives XYZ a healthy debt-to-equity ratio, which is a positive sign for XYZ stock. Section 4. Cash flow. Finally, we'll look at XYZ's cash flow. In 2021, XYZ generated $94.0 billion in cash flow from operations. This indicates that the company is generating a healthy amount of cash and has the ability to reinvest in the business or return cash to shareholders. After looking at these factors, we can conclude that XYZ, based on the data, is a good investment opportunity. The company's revenue, EPS, assets and liabilities, and cash flow are all positive indicators that the company is healthy and has strong growth potential. So, if you're looking to invest in the stock market, consider doing your own fundamental analysis on a company's financial health before making any decisions. You may need to refer to one of my earlier videos to learn how to read a balance sheet. Thanks for watching. Give me a like and subscribe.